Hi everyone, and thank you so much for watching my channel, The Witty Turtle. In today's class, we are going to study a very important section, that is section 44AB, which speaks about tax audit, right? So in the last few classes, we have studied many sections under section 44, where we have learned that in certain cases, getting your accounts audited under section 44AB is mandatory, right? So today whatever we have studied till now, today we are going to sum it up, and all those things are put together in this section 44AB, right? So this particular section is not a new thing for you, because most of the provisions, like I think 85% of the provisions you have studied till now under section 44AD, section 44 triple B, AE, etc., right? Yes. So section 44AB speaks about audit of books of accounts of certain persons carrying on any business or professions, right? So here we are going to study 5 points, right? 5 points where it is mentioned that all the persons coming under all these 5 points are required to get their books of accounts audited before the specified date, right? So the first point is based on turnover, and the first point is divided into two parts, right? The first part says that if most of the transactions are made via cash, hard cash, then what will be the turnover? And the second point says that if most of the transactions are not made by cash, then what will be the turnover? So the first point, if most of the transactions are done in cash, then the total sales or turnover, if the total sales or turnover exceeds 1 crore rupees, if the total sales or turnover is more than 1 crore, right? It is more than 1 crore, then the SSC has to get their books of accounts audited. Tax audit is mandatory, right? Now, the second point says that if the cash receipt is less than or equal to 5% of total receipts, and if the cash payments, whatever payments you are making, out of that, if only 5% or less than 5% of the total payments are made by cash, then the limit of your total sales or turnover is supposed to be 10 crore rupees, right? So in that case, tax audit is mandatory, right? I know the second point is very difficult, or it is very confusing to understand. So it says that if your cash receipt, whatever amount of money you are receiving, out of which whatever you are receiving in cash, if out of the total receipt, if your cash receipt is only 5% or less than 5%, and whatever money you are paying, so out of the total payment, if your cash payment, hard cash payment, is less than 5%, or it is 5% of the total payment, so in that case your tax audit limit increases to 10 crores of turnover, right? In the first case where you are dealing more in cash, the tax audit limit is 1 crore. If your turnover is more than 1 crore, then you have to get your books of accounts audited. And the second part says that if your cash receipt and cash payment is less than or equal to 5% of the total receipt or total payment, then in that case you have to get your books of accounts audited if your total turnover or your total sales is more than 10 crore rupees, right? It is more than 10 crore rupees. Another thing is that in this case, what will come under your cash? So in this case, whatever check or whatever bank draft which are not account pay, right? Which is not account pay check or account pay bank draft agar nahi hai wo, so in that case that will also be considered as your cash. So it includes hard cash and your check and bank draft which is not account pay, right? So both of these things come under your cash receipt or cash payment, right? I hope this is clear. So the first point was a limit of 1 crore and 10 crore according to the cases. Now the second point is very simple. We have studied in section 44 ADA also, that in case of professionals, if your gross receipt is more than 50 lakhs, if it is more than 50 lakhs, 50 lakhs, so in that case you have to get your books of accounts audited. Tax audit is mandatory. Now, uh, let us go back to section 44 AE, section 44 double B, section 44 triple B. So in these three sections, we have studied that if your actual profit is less than the presumptive rate of income, right? So in that case, what happens? In that case, you have to get your books of accounts audited. You have to maintain your books of accounts, and you will also have to get your books of accounts audited, right? So what does it say? If your actual profits or the PGBP income is less than the presumptive rates given under section 44AE, 44BB and 44BBB, so in that case you have to do your tax audits, right? If you're getting confused, then simply go back to section 44AE, BB and triple B. There it is clearly mentioned, and I have also revised the very same thing in the previous classes. Now, coming to the fourth point, it says that if under section 44 ADA कौन सा था? In which we were talking about professionals. If the gross receipt is more than 50 lakhs, then you have to get your books of accounts audited. So in this case, it says that if any professional claims his PGBP income is less than the presumptive rate. What is the presumptive rate? The presumptive rate is 50%, right? But if the actual profit or the actual PGBP income is less than 50%, so in that case, you have to check whether his net taxable income is more than basic exemption or not. So if the NTI is more than basic exemption, then in that case you have to get your books of accounts audited, right? So two conditions are there. The first condition is that your actual PGBP income is less than the presumptive rate, and your net taxable income is more than the basic exemption limit. So if these two conditions are satisfied, then you have to get your books of accounts audited, right? Now, coming to the last section, is relevant to section 44 AD. So in section 44 AD, we had studied that once you have availed 44 AD in a previous year, then it is mandatory for the SSC to avail section 44 AD for the upcoming 5 years, right? For the upcoming 5 years. Similarly, we studied another point there, that if in any year, any previous year, there is a violation happening in availing section 44 AD, then once you violated the rule, then again you have to you will not be eligible to take section 44 AD for the upcoming 5 years, right? Once section 44 AD is not availed, then he cannot avail section 44 AD for the next 5 years, right? So when the this 5 year wala provision is coming into the picture, then if any of those 5 years, if your net taxable income is more than the basic exemption limit, then in that case also tax audit is mandatory, right? uh, to understand it better, let's go back to this particular example. So in this example, you can see that previous year 21-22 there is a violation happening, right? So in the year of violation, you have to get your you have to check whether your NTI is more than basic exemption. If it is more than basic exemption, then you have to maintain your books of accounts, and you have to also get those books of accounts audited, right? Similarly, look at the previous years where I have circled in blue sketch pen, right? So these are the years where you cannot avail section 44 AD. So in these 5 years also, if your NTI is more than the basic exemption, then also tax audit is mandatory under section 44 AD, right? I hope this is clear. So we studied all the five cases. The first one was based on the turnover, 1 crore for the cases where more cash transactions are there, and 10 crore for the cases where the cash transaction is limited up to 5% of total transaction, right? The second point is for professionals. It says that if your gross receipt is more than 50 lakhs, then you have to get your books of accounts audited. The third point speaks about section 44 AE, section 44 BB, and section 44 triple B. If the actual profits are less than the presumptive rate, then in that case your tax audit is mandatory. The fourth point says that in case of section 44 ADA, which is for the professionals, so in that case, if the PGBP income is less than the presumptive rate, that is 50%. If the PGBP income is less than 50% of the gross receipt, and the NTI income is more than the basic exemption, so in that case tax audit is mandatory. And in the last section, which speaks about section 44 AD, where the 5 year wala provision is applicable. So in that case, if the net taxable income is more than the basic exemption, then in that case you have to get your books of accounts audited, right? Now, for all the above five cases, books of account must be audited by a accountant, by an accountant, right? And here in this case the income tax has specified that the accountant means any chartered accountant, right? Any chartered accountant. And the second point says that you have to get your books of accounts audited before the specified date. Now here we need to understand what is the meaning of specified date. Specified date means the date, the due date of your return filing 1 month prior to the due date of return filing, right? 1 month prior to the due date of return of income, right? That is your specified date. So you have to get your books of accounts audited before your return filing, before 1 month before your return filing. Now the next point says that you also have to furnish the audit report in the prescribed form, right? In the prescribed form, which is duly signed and duly verified by an accountant, right? And what do you mean by prescribed form? So in this case, the prescribed forms are either 3CA or it is either 3CD, right? Now, another thing is mentioned here is that when any person is required to get his books of accounts audited under any other law, if any other law, for example, in company law also, sections are there which says that tax audit and your books of accounts audit is mandatory. So in this case also, this particular section is applicable. If your books of accounts are supposed to be audited, are required to be audited under any other law apart from income tax, then also this particular section is mandatory, right? And there also your form number 3CA and 3CD are applicable. Now we have studied in which cases this particular section is applicable, but now we are going to understand three sections where section 44AB is not applicable. The three sections where your books of accounts are not needed to be audited. The first section is section 44B. Section 44B speaks about your shipping business, right? Shipping business, we have already studied that. So in that case, we during that class also we studied that books of accounts maintaining and audit is not mandatory. The next is your aircraft business, that is mentioned in section 44BBA. And the last is your section 44AD, where your turnover is up to 2 crores, right? The turnover is less than 2 crores, right? So under these three sections, your tax audit is not mandatory, right? Now we are done with section 44AB, but there is another section which is related to this particular section, which speaks about penalty if the SSC fails to comply with the with section 44AB. Then what shall be the penalty amount? So the penalty is mentioned in section 271B, right? So it says that if a person fails to get the books of accounts audited and he fails to furnish the report before the due date, then in that case the AO may direct a penalty of 0.5% of the total turnover or rupees 1,50,000, whichever is less, right? So that amount the SSC has to pay as penalty, right? 0.5% of total sales or total turnover or 1,50,000, whichever amount is less, right? I hope this is clear. So that was it for section 44AB. This was a very small and a very compact section because all the provisions mentioned here we have already studied that before, right? So yeah, if you find this video helpful, then please hit the like button, subscribe to my channel, The Witty Turtle, and also don't forget to share this video with your CA and CMA intern and final friends.